Let me talk to you about how taxes on cryptocurrencies work. Welcome back, folks, to another edition of the Awesome Suited Kiwi Show. How you doing today? I hope you are doing fantastic. I'm doing marvelous if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. Today I want to touch on a very important conversation. A lot of people hear about cryptocurrencies, Bitcoin, you have Ethereum and all this kind of crypto out there. But when it comes tax season, you got to make a decision, right? Because if you have made gains over the year, chances are the IRS is going to knock on your door to ask for each share of your profit. One thing I want to say very clearly here is that make no doubt, cryptocurrency investments must be reported. It must be reported. Back in the day, people used to be able to avoid reporting their cryptocurrency transactions and get away with it. But those were the early days, folks. The IRS wasn't sure back then how to treat the whole crypto thing. Now, Congress has acted, so times have certainly changed. There is no way to avoid reporting cryptocurrency transactions today. Nowadays, you have 1040 tax returns that make it very difficult to not see the writing right at the top of the return. At any time during 2020 and thereafter, they will ask you, did you receive, sell, send, exchange, or otherwise acquire any financial interest in any virtual currency? So the government is catching up, folks. So you have to answer that question, and you got to be truthful. You have to be forthcoming. And there is no excuse for not reporting your crypto transactions. The question is, which transaction really do you have to report? That's the $1 million question, right? There are several. Basically, any involvement that you've had with cryptocurrency must be reported. And this includes buying, selling, exchanging. If you received crypto as a gift, if you gave cryptocurrencies as a gift, if you used it as a barter for non-cryptocurrency asset. So the bottom line here is that it doesn't really matter what the transaction was. If somehow you virtually touched cryptocurrency, you got to report it. And the thing here is that don't let anybody kind of fool you, tell you that it depends on the transaction, the country, whether you had it, whether the crypto exchange was located outside the United States. No, it doesn't matter as long as you are a U.S. citizen and you got involved in crypto transaction during the year. You got to file taxes. So now that you understand the different types of involvements that necessitates reporting to the IRS, let's just talk about the different types of cryptocurrency transactions. What is it? A cryptocurrency transaction that can trigger a tax event will affect your cost basis and your overall gain or loss. Technically, cost basis means how much you spend to acquire the crypto, and this include the exchange fees. Here, I'm not even getting to the technicalities of wallet and all that kind of stuff. No, I'm just telling you that you have to, at the end of the day, your cost basis is how much you paid for the crypto, in addition to how much you spend in terms of extra cost. So you add all those up, and this will constitute your cost basis. So the following transactions will trigger a tax event. So selling cryptocurrencies and receiving US dollar in return, earning cryptocurrencies such as through lending. Nowadays, you have the peer-to-peer, the P2P lending platforms that dabble a little bit into cryptocurrencies. So if you exchange one cryptocurrency for a different cryptocurrency, in other words, you go from Bitcoin to Ethereum, for instance, or if you use cryptocurrencies to buy or sell goods, everybody knows right now, if you have some kind of interest in the crypto world, you know that there are some countries in the world that accept where transactions with crypto are customary, are usual. We don't have that in the States yet, but the bottom line here is that if you have those four events, you need to report. Let me repeat that. The four transactions that will trigger a tax event: selling crypto and receiving US dollar in return, earning crypto, such as through lending, exchanging one crypto for another, and using cryptocurrencies to buy or sell goods. One thing I want to say, and the government is certainly aware of that, and authorities have said it multiple times. Everybody knows that crypto transactions rather, are very difficult to track, and they were designed to be difficult to track. But it's not. It shouldn't be. It shouldn't deter you from reporting the truth, right? Part of reporting your cryptocurrency transactions is knowing your cost basis. You got to know if you had a gain or loss for the year. That's only determined by keeping track of all your buy and sell transactions. Nowadays, there are a lot of apps out there that allow you to do this very, very easily. You can also use there are some cryptocurrency exchanges that will allow you to have a log of all your transactions so that you can calculate your cost basis. So if you are day trading cryptocurrencies, manually entering in each transaction will be a lot of work. So just make sure that you are able to find the right tool for you. So speaking of tools, what are some of the tax tools for cryptocurrencies traders out there? And this applies, folks, to not only the people who are trading trading crypto on a daily basis, but also to people who are using the virtual currency as an investment strategy, as an investment tool. So whether you are trading it on a daily basis or a monthly or yearly, doesn't really matter. I'm going to give you a few tax tools you can use when it comes tax season to be able to to actually calculate your cost basis and keep track of your capital gains taxes and losses. Now, given that reporting cryptocurrencies transactions is required nowadays by the IRS, using an exchange that has great tax-related export features will make it a lot easier to report any transactions. Many exchanges will send you a Form 1099-K. Remember this, -K. And this form will show gross amounts for cryptocurrencies. Some of the most popular exchanges may even offer tax software integrations. We have studied at length, for instance, Coinbase. It's a great exchange. And Coinbase customers, for example, are able to easily import their transactions right into TurboTax. So you have the integration here between Coinbase and TurboTax. Well, the thing here is you got to use those two tools. In other words, you have to be a Coinbase customer and you got to use TurboTax. Right now, the integration is not happening yet with the other tax software tools such as Tax Act, H&R Block, Credit Karma Tax, and so on and so forth. There is also, and this is important for you to know, that there is also third-party software available that can keep track of individual transactions on stocks, options, and even cryptocurrencies. Let me give you a few apps. We've seen 4 apps that are pretty good. So you have a CryptoTrader.tax. You can see on the screen right now. We have the Coin Tracker. We have the Trade Log, and we have the Bitcoin.tax. So those are pretty good tools that we have used, and they're really good. And one thing you have to also know, I need to specify this. If you are a TurboTax customer, you may want to use CryptoTrader.tax because the two companies have a partnership. So that's pretty good. So depending on the info being reported, it may be worth hiring a tax advisor for help in determining your cost basis and ensuring that everything is reported correctly on your tax return. I'll give you an example. If you take H&R Block, for example, they offer cryptocurrency investors special consultations with local tax pros to help them properly report their gains and losses. So one thing I really want to specify here, folks, is that we're not giving you a tax advice here. We are sort of, steering you into the right direction. Everybody's situation is different. At the end of the day, it's very important that you make a decision that works for you. So it's always good to enlist the help of a tax professional so that the expert, the CPA or EA enrolled agent can take a look at your crypto situation, your investments, and help you compute the cost basis if you can't do it yourself. Let's now talk about how to pay taxes on cryptocurrencies. When you talk about the cryptocurrency transactions, those transactions fall into two major categories. So you have capital gains on one side and then ordinary income. So capital gains are your investing activity. This is what most cryptocurrency traders are involved in. Ordinary income activities are not trade related. So let me just kind of break it down more for you. Capital gains, in other words, investing. So here you buy, you sell, you trade. Very important. So capital gains, buying, selling, trading. And then you have in the second column, you have ordinary income. And this comes from mining, earning rewards in exchange for staking coins, and interest on lending. If you don't understand mining, please check out our we've got a great video out on how to trade cryptocurrencies in general. And we have a whole series about crypto so you can understand. Now, your exchange, whether you are with CoinTrader or another one, your CoinTracker rather, what am I talking about? Coinbase, your exchange, whether it is Coinbase or another, will typically report transactions on a 1099 miscellaneous, such as through lending, a 1099K for transactions, or a 1099B for selling and exchanging. So we also have Form 8949 that you need to know about if you are a crypto trader. This is where cryptocurrency investment transactions are reported. This is the same form used for reporting stocks and other equity transactions. So cryptocurrencies are treated as tax purposes. So they are assets, financial assets. So by doing that, the IRS is actually aligning cryptocurrencies with equities. So for gains on holdings of more than a year, they will be treated as long-term gains, which are taxed at a lower rate than ordinary income. Long-term rates range from 0% to 15% to 20%, depending on your income level. All right, folks, now I just want to wrap up to this conversation here. And I just want to say that it's very important at the end of the day. You got to understand that there is a lot that goes into paying taxes on cryptocurrencies. If you are comfortable with taxes, if you understand your personal financial situation, if you've done it before, I would say go ahead and just do it. If you are a DIY kind of girl or guy, go ahead and do it. If you're comfortable using transaction software to determine your cost basis and file your return, go ahead and do it. Again, make sure that you are very clear about what cost basis is, and that you can substantiate to the IRS how you determine the amounts. Because God forbid something happens and you are audited, you want to make sure you can actually show the tax man all the levels, all the different steps that you took to do the math. If you're not comfortable, if on the other hand you're not comfortable with the software tools, or you just don't have time for it, you don't want to bother with it, I would say you just hire a tax advisor. You can hire a tax advisor directly in your area, and this person can be a CPA, a certified public accountant, or an enrolled agent, or a tax attorney. Or you can even reach out to an online tax preparation tool, such as preparation company, for example, such as H&R Block, right? Because they have H&R Block, they have a network of brick and mortar, I would say, offices throughout the country. And those experts, maybe near you, can help you, can look at your situation, look at the transactions you had during the year, can look at which type of transactions you had and your personal situation, and advise you as to which particular tax strategy you should use. But if there is one thing I want you to take out of today's conversation, is that you got to report your cryptocurrency transactions. You have to report them. I don't care whether you made losses or gains. I don't care whether you think the amounts are small. The IRS came out very clear about it. The authorities are now following this. They're monitoring this thing very closely, and they want you to report everything. All right? Great. Thanks for sticking around till the end of today's conversation. This was a short one, and I just wanted to drop it and really advise a lot of people out there that this is an important thing. Crypto has shown a lot of crazy returns, triple digits return, double digits return. So a lot of people are making money. That's pretty good. But remember the tax man. I will see you next time. But until then, remember, stay marvelous.